So in this video, I'm going to give you an account or a step-by-step run through from having 0 properties to now having around £1 million worth of property. So as usual, I want to be fully transparent with you. Just because all the properties that I own are valued at £1 million, it doesn't mean that I have £1 million surplus cash, and it doesn't mean that I have £1 million worth of equity in all of these houses, because they are all mortgaged, and I will go through that with you. And I'll also give you the figures at the end of this video, and I'm going to give you a step-by-step run through starting from when I first purchased my residential house. Now, if you're looking to get into property investment, one of the best pieces of advice that I can give is to actually start out by getting on the property ladder yourself. And by this, what I mean is it's really important for you to have your own residential house, because not only will this give you a good footing, it also really helps when it comes to lending money. So when you come to buy a property investment, a buy-to-let property, the lender is going to want to see that you own your own house. Now, if you don't own your own house, then you're going to find it really difficult to actually start investing in property. So the first thing that I did at quite a young age, I think I was about 19 years old at the time, I saved up a deposit and bought my first house. Now, this house was on the market for £110,000, and I managed to negotiate it down to £104,000. Now, at the time, you could get 95% mortgages, so I only had to save up little over £5,000 for my deposit. And then there were obviously solicitors' fees, stamp duty and things like that. So I had around £10,000 saved up, which I used to buy my first house. Now, at the time, as a 19, 20-year-old, £10,000 was a hell of a lot of money. And the way that I saved this money is by doing side hustles. I started my own online business. I was doing bits here and there. I even had a part-time job at one point. That didn't last long. So by the time I was 19, I did have enough for a deposit to buy this. It was a 2-bed semi-detached house, plenty big enough for myself. And I went ahead with it, and that's my first property for £104,000. Now, fast forward 8 years. Yeah, it was 8 years after I purchased my residential house that I got into buy-to-let property. Again, this is just showing you that success is not something that happens overnight. I know that people go on about the portfolios and how to build property empires, and it all seems like they've done it like that, when in reality, these things take time. And from when I purchased my residential house to buy my first property investment, it was in fact 8 long years. Now, during this time, I managed to save up around £18,000 to £20,000, which I used to invest in my first property. I have mentioned this in other videos before. It was quite a rundown property, which I managed to get for £54,000. And I did have to spend a lot of time renovating the property. And at the time, the BRRR method wasn't really a thing. You never really heard about it that much. But that's exactly what I did with this property. I purchased it at a really low price. I spent a lot of time and a bit of money renovating it. And then 2 years later, I remortgaged, pulled out a lump sum of money and continued to rent it out. Now, today, that same property is now valued at £100,000. So as you can see, this has turned out to be a really good investment. I've made quite a lot of money on this property alone, and it's also given me that good footing, that stepping stone onto building a portfolio in the future. Now, a couple of years after I purchased this buy-to-let property, I actually sold my residential property. Now, I sold the property for £126,000, and I had around £60,000 equity, which had obviously built up over the 8 years, plus the mortgage payments which I'd been paying in. So I then bought a new residential house for £240,000. Now, again, I spent quite a bit of money on doing the house up. I added extensions, new kitchen, new bathroom, completely did the garden. And at the time of making this video, my house, which I currently live in, is valued at £340,000. So I started out with a house for £104,000, which I gained capital appreciation on, and I sold that and now bought a house for £240,000. And again, we've seen capital appreciation, plus I've increased the value by doing various works on the property. So this has given me a good step up the ladder, so to say, and the capital appreciation of property prices increasing over that time has certainly helped too. So not long after I moved into this house, I went on to buy my second buy-to-let property. And I managed to buy this property from the money which I had saved from all the rental from my first buy-to-let property. And if you remember me saying, I also remortgaged that first buy-to-let property after 2 years, which enabled me to pull out some of the cash. So at this point, I now have enough deposit to go and buy another one and repeat the process. Now my second buy-to-let was £90,000 and it's actually been valued now at £120,000. Again, good capital appreciation. Now, after I purchased my second buy-to-let, I went on to quickly acquire another buy-to-let, and I actually did a video about this. The way in which I raised the capital for my third buy-to-let was to withdraw equity from my residential home. Now, as I mentioned, I did build up quite a lot of equity in this house because of all the renovation work that I did on it, the improvements, the extension, and also the capital appreciation. So it made perfect sense for me to withdraw some of that equity and use that to buy another buy-to-let, because with the interest rates being so low, it only cost me an extra £76 per month to take out enough money to buy another property. And this third buy-to-let property cost me £85,000, and that is now valued at £105,000. Now, as you can see, I'm buying these properties, and with buy-to-let, you have to put down a 25% deposit. Now, as the housing market increases and these buy-to-lets are increasing in value, my equity in these properties is also increasing. So I start out with 25% equity in the property, and then that quickly becomes 30, 40, 45, even 50% equity in the property when the prices go up. So now that I've got 3 buy-to-let properties and my residential, I thought this would be a good time to set up a limited company for any future properties that I purchase. I won't go into this in this video because I have done another video showing the advantages and disadvantages of buying a property in a limited company compared to buying one in your own personal name. Now, at this point in time, buying properties in a limited company was much more beneficial for me, so I set this up and I went and purchased my 4th buy-to-let. Now, this was a really, really great deal. It was just at the time when the pandemic had started, or I think I actually put the offer in before the pandemic started. And I got this house for £86,000, and it's now worth £120,000. Again, after a very small refurb, it hardly cost me anything, and all the capital appreciation over the last 3 or 4 years, I made really good money on this property, and it enabled me to then quickly go and buy my 5th buy-to-let. Now, as you can see, the compound effect is starting to kick in now because I've got rental income coming from 4 properties. So my cash flow is good. I'm managing to save a good amount of money per month, which means that I can save enough for the deposit for my next property a lot quicker. Now, my 5th buy-to-let came along. Now, to be honest, I did put some money in there from my current business. I'm not going to lie. I'm not going to say all of this money has come purely from property because I wanted to speed up the process a bit. So I used the profits from my other online company to actually fund my 5th buy-to-let. Now, I felt at this time that momentum has started to kick in and that I could actually achieve 1 new purchase per year. Now, the fact that property was going up in price quite quickly, it meant that I would require a bigger deposit to buy another property. Therefore, I had to continue to save, I had to continue to use the rent from previous properties, and as I just mentioned, I also took money from my other online company to fund my future properties. Now, my 5th buy-to-let, I actually did a full video on this one. You may have seen it, you may have not. I'll put a link at the end of this one, just in case you haven't. Now, this was a really, really good buy. It was a pure vanilla buy-to-let. I went in, absolutely nothing needed doing. I got the house for £85,000 and I managed to get a tenant in there straight away. And this property is now worth £100,000. So again, done pretty well with this one, and my portfolio is growing nicely. And I'm still aiming to buy one property per year. Now that one was really straightforward, and at the time I was really keen and really eager to go and get another one as quick as I possibly could. However, this proved really difficult because this happened at the time when property really took off and a lot of people started getting into property. The house prices went up a lot. Houses were going on the market and they were selling in a matter of hours or days. And as an investor, I found this really difficult to acquire my next property, because up until this point, I'd always gone into property negotiating, getting a lower price and finding good deals. But all of this just went out of the window literally overnight, because a house would go on the market, I'd call the estate agents and they would say, yeah, 15 or 20 other people are also viewing it. And 99 times out of 100, that property would go for more than what it was put on the market for. So it did take me quite a while to adjust to this, and I did find myself losing out on a lot of properties during this 12-month period in the pandemic when the housing market just went crazy. Now, when it come to my 6th buy-to-let, again, I did do a full video on this one, and this house went on the market for £92,000, and I called the estate agent and went straight in at £96,000. Now, the reason I did this, I asked for a viewing and basically they said, no, they've already got like 15 other people viewing the property and they didn't want any more. So I offered the £96,000 and lo and behold, the vendor accepted and I managed to get my 6th buy-to-let. Now this property is easily worth £110,000 now, 9 months down the line. So again, even in a short period of time, I've actually seen some really good capital appreciation on not only this property, but obviously all 7 of them. And it's down to this that has actually got the value of my properties up towards that £1 million mark. Now, of course, I want to be transparent. I don't want to give any false claims, and I certainly don't want to give people false pretenses by saying, just go and buy property and it'll go up in value, because there will come a time when those properties will go down in value, or there may be a crash, or they may stagnate. I don't know. My personal opinion on this is that we will see a dip in properties in the next couple of years. Will that worry me? No, it won't, because I'm in it for the long run and I know that eventually the property prices will go back up. So there you go. There's my journey of me going from absolutely zero to acquiring 7 properties. I haven't actually given you the final value of them. The value of these 7 properties at the time of filming this is £995,000, which I know is slightly shy of the £1 million mark, but I'm pretty certain at some point in the very near future we'll smash that figure, whether it be through more capital appreciation or whether I buy my 7th buy-to-let, who knows, or I may even move house and buy a higher value property. Now, I said at the beginning, I want to be fully transparent. This £995,000 worth of property, it's not 100% equity. I do have mortgages on these properties. I estimate that the equity that I own in these 7 properties is around 45 to 50%. So that means I have a net value around £450,000 to £500,000 in these properties. Now, if you are to take something from this video, a lot of the wealth accumulated in this portfolio is mainly down to saving and reinvesting money over time. So a lot of people, when they get into buy-to-let, they'll start to receive an income, they'll start to get cash flow, and then they'll use that cash flow to supplement their lifestyle. So they'll never get a chance to reinvest it. And this is why the majority of property investors or landlords only ever have 1 or 2 properties. Now, if you can be disciplined and actually save your money, use your cash flow wisely and reinvest those profits into future properties, then as you saw with my journey, at the start it was really slow. I bought my residential house and then nothing happened for about 8 years. Then I acquired my first buy-to-let. I then moved house. Then it was another few years before I got my second buy-to-let, and then things started to speed up, where I was in a position to actually buy property every couple of years, then every year, and then now I'm actually in a position where I could probably buy 2 houses per year. And all of this boils down to the compound effect. So if you want to build wealth, especially through property, then I highly recommend that you come up with a plan where you can save and reinvest, save, reinvest, and so on and so on. And if you do it this way, you'll find that in the medium term, you'll accumulate enough cash flow and enough wealth where you actually maximize the amount of investment you can make. Now, it may take you 10 or 15 years to go from 1 property to 3 properties, but then it may only take you 2 or 3 years to go from 3 properties to 6 properties. Now, I'm not saying this is the only way to do it, but I'm just giving you my personal experiences, my personal journey, and this is the way that I've managed to build a decent sized property portfolio. So I hope you enjoyed this quick video, and I hope I'll be back soon with another video where I've made £2 million worth of property. Now, if you enjoyed the video, please be sure to hit the thumbs up button, and don't be afraid to leave a comment below if you have any questions for me. I'll do my best to answer them. Hope this video was helpful, and hope I come across as transparent, because there is a lot of people that try to get you into property and they don't really know what they're talking about, or they give you false claims, high expectations and things like that, whereas I go for the approach of being honest and showing you how it's done in real terms from a real person. So hope you enjoyed the video, and I'll catch you soon.